We're going to take a look at Tesla, nearly doubling its revenue in the first quarter despite ongoing supply chain difficulties while increasing prices across its lineup. In fact, it built 305,000 vehicles in the first quarter, delivering 310,000, opened new factories in Berlin and Austin in Texas. It's also trying to shore up its battery component supply chain as part of the company's localization strategy, seeking to lower those production costs by building vehicles close to the markets in which they'll be sold. Does face the increasingly tight supply of critical semiconductors, rising prices because of inflation. It's also shuttered its gigafactory in Shanghai because of those COVID outbreaks there. And but for the outlook, expecting a 50% increase in vehicle production next year at least. However, the Cybertruck and Roadster continue to be delayed on their product line. Shares at last close up there more than 3%, sitting above that $1,000 level. So Claude, taking a look at the end product in this sector, Tesla, your thoughts?
Well, I think that Tesla is a battleground stock, and I'm merely a small cap analyst from Australia, so I don't think that my view on this stock necessarily is as insightful as some others could be. But basically, Tesla on the one side has genuinely a profitable business, and it's defied a lot of hate, like a lot of people that have been saying, oh, this is going to crash and burn many times. And I think what those people have missed is that there's going to be, for a really long time, ready access to capital for Tesla. That's because many people believe that the way to play in this space is to own a good brand, to own innovation, to own know-how, because all of these things contribute into a competitive moat that arguably is going to allow Tesla to increase its profits for very many years to come, and will be very hard for somebody else to catch up with them on some of their technological feats. And on top of that, even if someone else does catch up with them, which will probably happen one day, maybe they'll even be overtaken. But when that does happen, Tesla's still there. It's not like it'll be just knocked out by some other company stealing market share. So basically, I agree with those people that, Tesla is an interesting stock for sure. I guess on the other hand, you have people saying, look, it's an interesting stock, but it's priced completely crazily. It can't grow into its valuation. It's, just simply too high. And look, that I am sympathetic to that point of view as well. Tesla, sociologically, if you look at the trends, Elon Musk, his massive persona does a lot to boost the share price. A lot of people do just blindly buy Tesla shares because, electric vehicles. So I think that where we are in the sociological cycle right now, we've seen a lot of popular tech stocks come down a long way. Tesla hasn't come down. It's been remarkably resilient and good for it. But I would not be surprised if eventually the sociological cycle does come for Tesla, and we might see some of the optimism come out of the share price, and that's when it would be more interested to me. So I apologize. I just have to sit on the fence on this one because I don't have enough expertise to make a call one way or the other.
Yep.
But, certainly they're the factors I would consider.
Fair enough. Andrew?
This is a very dangerous company to start with, Andrew, because we could talk about this for an hour.
Yeah.
It's defied all of the critics. It's a phenomenal business. It's the only game in town when it comes to electric vehicles. If you want an EV, what are you going to get, right? It's the iPhone of electric vehicles. Yes, there are other ones out there, but they are orders of magnitude behind where Tesla is. They've revenues up close to 200% over the last 3 years and swung into profitability. They're not even at scale, and they're generating a 10% net margin for a car company, right? And these gigafactories are just an engineering miracle. The way that they can the throughput they can get from them. So there's a long way to ramp up with all of that. But I think the real argument here in terms of the investment case is the optionality that they have around it. So yeah, it's a car company, but it's also a battery company. It's also an AI company. It's also a robotics company. I don't know if you saw the recent TED Talk with Elon. They're going to be building robots in the next couple of years. So once you solve vision, which is what they've had to do for self-driving, You know, we have the batteries and actuators for robots. We've had those for ages. It's always been a question of how they can sort of steer and walk themselves around. They're doing that. And he's actually sort of put out a time frame, you know, take this with a grain of salt, but it's sort of 5 to 10 years. We could have these in our homes for the price of a mid-price sedan. So it's wild. And yeah, Claude's right. This is a $1 trillion company. It's on 18 times sales on a trailing 12-month basis. That is eye-watering. But I wouldn't bet against it. So I'm like Claude. I don't know it well enough to sort of say definitely buy, definitely sell. But I think anyone who's got a bit of money in there, I'd be loath to get rid of it just because the optionality is so massive. And yeah, it's an exciting time for the company.